Hello guys, welcome. This is King Kelks as always. In this teaching, we're going to be continuing in our technical analysis series. Specifically, we are going to be covering time and price theory. So we've delved a lot with price, how price moves, expansion, retracement, reversals, consolidations. We've dealt with market structure, we've dealt with liquidity, we've dealt with premium and discount. Now, before I go down into entry techniques, risk management, and all that, it's important that you know that there is a time factor to all of these things we're talking about. So, I've told you that I'm a day trader, and the entry rules and strategy I'm going to be teaching you in the final video, or the second to the last video, is going to be very, very restricted by rules, right? By the rule of time. So there's going to be a couple of rules I'll be giving you at the end of this teaching, and one of the rules is time. It's essential you understand that to everything that happens with price action, there is a time element, and you want to be in confluence with time in order to have a high probability trade setup. So without further ado, let's get right into it. So time and price theory essentially stipulates that the most important confluence for any high probability trade setup is that of time and price. So the confluence of time and price, like there could be a setup, right? When I finally show you my entry rules and everything, you could have a setup looking at you on the screen, but if there is no time confluence with that price action setup, you do not take the trade. It's one of the rules I'll be teaching you, because as a forex trader, in order to maintain that level of consistent profitability, you have to adhere to rules. Like, it's a no-brainer. Any profitable trader out there, somebody who is consistently profitable in the long run, is someone who has disciplined himself to adhere to the rules. When I finally give you these 5 rules, and I'm kind of digging into it already right now, just so you understand how important this is, you have to stick to the rules, right? Okay, so the most important confluence for any high probability trade setup is that of time and price. Note, it says time and price, not price and time, which means the time has to be right before you even look for that trade setup, right? So let's keep going. The algorithm that delivers price, that's the interbank price delivery algorithm, has certain distinct characteristics of price delivery during specific times of the day, right? So what this means is that during specific times of the day, there are certain behaviors that price has, and so these behaviors of price help us know when to expect certain movements, right? It's not always going to work out that way, but I mean, characteristics can be generalistic in the sense that you know that during this particular time of the day, this is what we could expect. It might not turn out that way, but you know that there's a high probability that this is what we could expect. That's why we're going to be studying these characteristics. So during specific times of the day, there are certain characteristics that we look out for, right? So these distinct characteristics help us frame and refine our trade idea based on these specific times of the day. The important times to note are the Asian range, the ICT London kill zone or LOKZ, the ICT New York kill zone or NYKZ. These are the 3 important times to note for time and price theory. So let's go further. Now, talking about the Asian range. The Asian range is the time between 7 p.m. to 11:59 p.m. Eastern Standard Time, right? So as an ICT trader, it's essential you understand that everything we do is referred back to New York time, because New York is our basis, right? Like the big banks and everything, they operate with the time of New York. So this Asian range is from the time of 7 p.m. to 11:59 p.m. New York time. That's GMT minus 5. So as a Nigerian, this time translates to 1 a.m. to 5:59 a.m. West African time. That's during GMT plus. That's for our time zone of GMT plus 1, right? So when the time zone is GMT minus 5, right? This is the time that the Asian range covers, right? So converting it to our time, that's going to be 1 a.m. to 5:59 a.m. West African time. Now, the Asian range is characterized by being dead time. What do we mean by dead time? This is the time in which there's the least amount of liquidity in the markets. So what do we say? The more liquidity there is, the more the more the market is active, right? So now, because of a lack of liquidity, it's dead time, right? There's no much movement in the markets during this Asian range. That's during the time of 1 a.m. to 5:59 a.m. West African time, right? GMT plus 1. So due to the relatively low liquidity during this period, the price action is typically a consolidation. We treated consolidation when we were talking about framework in which price moves, right? Which is characterized by price trading within a specific range. Now, not always. This is a typical movement, but not always. Okay. So during this period of consolidation, there will typically be an accumulation of orders above and below the consolidation. What do you mean by this? Because price is in a consolidation, what we're going to have is that there are breakout traders. What do you mean by breakout traders? People who think when price breaks in a particular direction, right, that means it's going to keep going that direction. So people are going to put their buy orders on top of that range of consolidation. People are going to put their sell orders below the range of consolidation. This is what we mean by accumulation of orders above and below this consolidation, right? Now, these orders above and below the Asian range are liquidity pools, right? What do you mean by liquidity pools? Places where there is huge liquidity in the form of money. What's liquidity? We said liquidity basically means money in the last two videos, right? So the market can purge this liquidity before trading in the true daily direction. Let's keep going further. So the interbank price delivery algorithm defines the daily range from 12 a.m. Eastern Standard Time. Now, we said over here that the Asian range is from 7 p.m. to 11:59 p.m. So as soon as it clocks 12 o'clock, that's the beginning of a new day. That's 12 o'clock Eastern Standard Time. In Nigeria time, that is 6 a.m. Right? So as soon as it clocks 6 a.m. Nigerian time, that's the beginning of a new day. It's no longer Asian range. So Asian range is basically what wraps up a trading day, right? So for us ICT traders, the beginning of a trading day is what? 12 a.m. New York time, which means when the time is GMT minus 5. Why do I keep emphasizing on when the time is GMT minus 5? Because there's this thing called daylight savings time, which I will emphasize later in the video. When New York time or other times towards the western side of the world, they will go back 1 hour, right? And then during some times of the day, they will come forward 1 hour. So right now, the time zone is GMT minus 5 over there, right? So when you convert the time to our Nigerian time is 6 a.m., right? So that's a 6-hour difference right now. So when daylight savings doesn't apply anymore, it's going to be a 5 hours difference, which means it's going to move back. The beginning of the day is going to move back to 5 a.m. While for our Asian range over here is going to move to 12 to 5 a.m. Right? That's when it becomes GMT minus 4 when daylight savings begin to apply from March 2024. But for now, this is it. Until March 2024, I will try and inform you all on the community here on YouTube, right? When daylight savings time is going to apply. So until March 2024, this is the time conversion that we're using, right? So the interbank price delivery algorithm defines the daily range from 12 a.m. Eastern Standard Time. So as soon as it's 12 o'clock, we're done with Asian range, 12 a.m., right, in New York, and then we've begun a new day. That's 6 a.m. GMT plus 1, right? Now, remember we said in Nigerian time. So on my trading view, I'm using my Nigerian time, right? So as you can see, this is 1 a.m., right? This is 6 a.m. the beginning of the new day, because I can't set this thing on 5:59, right? So this is the Asian range, and as you can see, price was is characterized by being in a particular range, right, that it didn't really go out of. Same over here, you can see the Asian range between 1 to 6 a.m. over here, right? So typically we'd expect that there's going to be pools of liquidity above here and below here, right? So this Asian range is the time of is when trading in areas like Japan and all those Asian countries that usually used to happen. But the thing is that it's when other people in other parts of the world are kind of sleeping, right? It's during the Asian session. So that's why we don't really have much market movement. So that's why price is typically in a consolidation. So going further, the ICT London kill zone. Now the London kill zone is between 2 a.m. to 5 a.m. New York time, right? GMT minus 5, which translates to 8 a.m. to 11 a.m. Nigerian time. So in the previous one, we talked about how it's from what? 1 o'clock to 5:59, right? Or 6 o'clock if you have rounded up. While the London kill zone begins from 8 a.m. So that's basically 2 hours after what? Asian range, right? So 8 a.m. to 11 a.m. Nigerian time. So typically the London kill zone is characterized by purging liquidity above or below the Asian range in what we call manipulation before trading in the opposite direction to form the true daily range, right? So that means what we're going to expect in London kill zone is that price is going to go and take out one of the liquidity pools, but that liquidity pool it goes after is not meant to keep going in that direction. It's just meant to take liquidity in that direction and then go the opposite direction. That's why we call it manipulation, right? It's manipulating people that are breakout traders and think when we go and take liquidity there and they have entered the trade, it will keep going their way when it's actually not. It's actually manipulating them before trading in the opposite direction to form the true daily range in what we call distribution, right? So the London kill zone could form the high or the low of the day. So when it goes to take that liquidity, right, the point at which it grabs that liquidity could remain either the high or low of the day depending where it takes the liquidity. If it takes it above the high of the Asian range, right, then that could be the high of the day for the entire day, because remember we said then we're expecting distribution to the opposite side of the day for the remaining day, right? Or if it takes the low of Asian range, then we expect it to go in the opposite direction, which is high, right, up, and which means that low that took out liquidity could remain the low of the day. So the London kill zone could form the high or low of the day. So as you can see over here, this was our Asian range, right? And we said we had accumulation of orders over here. Now 8 a.m. over here, sorry it's overlapping, right? But 8 a.m. was when London kill zone began and 11 o'clock was when it ended. And you can see right here at 11 o'clock, right? Okay, even right here by 9 o'clock we had already taken out liquidity above the Asian range, right? So all these move above here could be characterized as manipulation. So let me do this. So all this moving right above the Asian range is a manipulation, right, to take out liquidity. And then you see how it formed the high of the day, right? It formed the high of the day and then we went in the opposite direction throughout the entire day, right, to form distribution. So let's keep going further, shall we? Over here as well, you can see from 8 a.m. to 11 o'clock, exactly at 8 o'clock. I'm not always saying it's going to be exactly at 8 o'clock. Neither am I saying that at London kill zone we're always going to take out liquidity, but it's a distinct characteristic to look out for, right? Is what I'm saying. So 8 o'clock we took out liquidity above the Asian range, and as you can see it formed the high of the day and we went in the opposite direction throughout the entire day. So this over here during London kill zone, right, we see this manipulation occurring. And finally the ICT New York kill zone. So the New York kill zone is 7 a.m. to 10 a.m. Eastern Standard Time, GMT minus 5, and it translates to 1 p.m. So what did we say London kill zone was? That was 8 o'clock to 11 o'clock. Now 2 hours after London kill zone closes, that is 1 o'clock, right, to 4 o'clock Nigerian time is our New York kill zone. So why is it New York kill zone? Because why is it called New York? Because that's when 7 a.m. That's when it's 7 a.m. in New York time, right? So while that other one was called London kill zone because that's when it's morning in London, right, or in Nigeria, because London and Nigeria were in the same time zone. So typically the New York kill zone is characterized by being a retracement into the London kill zone range, followed by a continuation, right, or distribution, or a complete reversal of the London move. What do we mean by this? You'd see, right? So these are London kill zone over here when manipulation occurred, and then distribution started. When we say distribution, which means we are going in the true range, right, that the market makers are taking it. So this is New York kill zone over here. As you can see, it was a continuation of what? It was a continuation of the true daily range, right? sometimes it could be a retracement of the true daily range, while sometimes it could literally be a complete reversal, right, during New York Hill Zone. But over here on the screen you can see examples of a continuation in our distribution, a retracement, and then a continuation in our distribution, and sometimes it could be a reversal depending on how the market makers have set up the trading range for that day to be. So going further, okay, let me get rid of this. All right, so that is essentially the 3 important times of day to note, right? From 1 o'clock to 5:59 for our Asian range Nigerian time, right? 8 o'clock to 11 o'clock London Kill Zone, then 1 o'clock to 4 o'clock New York Kill Zone. During Asian range, we're expecting a consolidation of price and accumulation of orders above, right? Then during London Kill Zone, we're expecting what? A manipulation, right, which could form the high of the day or low of the day above the Asian range, right, or below the Asian range. Then we expect it to now distribute, right, in the true daily direction. New York Kill Zone could be a continuation in distribution, a retracement and continuation in distribution, or a complete reversal. So these are some examples. Now over here you would notice that I think that was why I brought in this example, right? I wanted to show you the exceptions, right? You can see that price clearly did not take out liquidity below the Asian range, right? Because sometimes it's not always going to be a guarantee that the liquidity pool price will go for is the one below or above the Asian range. Sometimes it could be that price has been trading in such a way that the liquidity pool it needs to grab before making its true movement is just below certain lows within the Asian range, right? So you just want to know when liquidity has been taken, which I will show you in the next video. I've already showed you in the previous video, but I want to show you when to know that there's going to be a move that can unfold, right? A good high probabilistic move after liquidity has been taken, so that you will not just be waiting for it to take out liquidity below Asian range and then it has already taken out the liquidity it needs and then go in the true direction. So anyways, these are the 3 important times, and like I said, the true daily range, or the right one trading day is from 6 a.m. right Nigerian time to another 6 a.m. or 5:59. So that's what forms 24 hours of our trading day, right? Or let's say 12 a.m. New York time, GMT minus 5 to what? 11:59. So we operate this on New York time. So to set up your time, just come over here in your trading view. You see a settings button. You can choose your sessions, right? I'm not using trading view for this presentation. I've set up everything over here. So this is everything for now in this video. In the next video, we are going to be discussing accumulation, manipulation, and distribution, just so that you get a better understanding of everything. It's just basically going to be a recap of this video and a few added on things. Let's go. So okay, finally, this is what I was talking about, daylight savings, right? So during the spring, right, we go forward by 1 hour. When we say spring, that's from March, typically from around the 20th of March, 23rd, right? We go forward by 1 hour. So why during fall, right, that's during November, we'll now go backward by what? We'll go backward by 1 hour. So I can't remember if it's September or November, but just know that around March, right, New York is going to go forward by 1 hour, which means from GMT, you can go research what daylight savings is if you don't know. From GMT minus 5, if they go forward by 1 hour, it's going to become what? GMT minus 4, because now they have gone forward by 1 hour, which means we have reduced the negativity by 1, right? So it's GMT minus 4, sorry, which means if the difference now between us and them is 6 hours, by then it's going to be 5 hours. So our 6 a.m. opening time, right, for the day is going to now become 5 a.m. right? Our London kill zone from 8 to 11 is to become what? 7 to 10. Our New York kill zone from 1 to 4 is to become what? 12 to 3. Do you get why our Asian range is going to become 12 to what? 5 o'clock, or 4:49, 4:59, sorry, right? So that's basically what daylight savings time means. But for now, we're still on GMT minus 5. So our Asian range, that's for now as I'm speaking to you in December, right? For now, our Asian range is from 1 o'clock to 5:59. 6 o'clock is the opening of the day. 8 o'clock to 11 o'clock is our London kill zone, and 1 o'clock to 4 o'clock is our New York kill zone. That's it for this video, guys. See you in the next one.